My name is Rob Fuhrman. I'm the senior analyst at Katusa Research, so I work with Marin. And it's great that you guys took some time out of your Sunday to be here. I think this is actually going to be one of the most educational and informational panels that we're going to have at the conference today. We've got three great guys up here that really don't need much in the way of introduction. We've got Brent Cook from Exploration Insights, David Morgan from the Morgan Report, and Nick Hodge from the Outsider Club. All three of these guys have been around the industry for a long time. They're very well versed in the sector, and they've got the scars to prove it. And just like my boss, I like to ask the tough questions. So I'm going to ask, the first one I'm going to ask to all three of you is, this downturn has definitely lasted longer than all of us would have thought, for sure. But what is the biggest mistake you guys made in this downturn, and what are you going to do to change that and rectify it moving forward for yourself and your subscribers? David, you can start.
Okay, well, first, good and the bad. So good was I did call the top. I called the top in 2011, and at that time said you should sell some or hedge. What I did wrong was tell you how to do it for 6 years. So to do it over again with 2020 hindsight, I would have diversified into other sectors more than just sticking with the resource sector, which is definitely my passion and my love. But even in a bad sector, you can do fairly well. I mean, we kicked ass with Kirkland Gold. My only junior silver spec is doubled this year, and our land position has tripled. If you saw my presentation one over at 1 o'clock, I've got a unique technology situation that no one else seems to know about yet. Once Nick writes it up, I'm sure the stock will double, and when we get the gray-haired man here, it'll probably quadruple. So no excuses. You know, I don't like to go too far out of my sector, but I would probably have, gotten with my team and gone into other sectors or parked money or built cash or that kind of thing.
Okay. Brent?
Yeah, I'm on? Okay, yeah, I think what went right and wrong. Well, I picked the top a week before David in our purchases, really. But I think one thing we have done wrong is we bought value resource stocks that are legitimate. They're probably deposits one day, but they haven't performed at all. I mean, resources are not working right now. I mean, resources in the ground, tons and grade. That's just not working right now. But I think we've done all right. And I think looking forward, it's really going to be about exploration and discovery. Right now, easy stories, there's no catalyst for them.
Right.
So that's kind of where we're at right now.
Okay. And Nick?
Yeah, I think buying too early was a mistake I made, but only in certain names. I'm thinking of companies that are in the boring, quote-unquote, stage of either putting together a feasibility study or going through permitting. And while they might be quality deposits and they're going to be mines one day, as I believe, like Brent said, it's just the wrong time, right? You make a discovery in 2010, and that was kind of like the absolute worst time to make a good gold discovery. And so, yeah, timing, I think. And then I think believing a bit too early. And so what I mean by that is chasing too many deals, not sticking with your core nexus of shareholders and investors and straying outside a bit and betting on other teams. And I think that's dangerous sometimes in a market like we're in, because you can get caught up in just paper flips because the market isn't there to support actually building a company.
Right. Yeah, no, that makes a lot of sense. Okay, so let's talk a little bit about what it takes for a stock to get on your top stock list here. So due diligence is something that, as an analyst, is super important. We all go to site trips and whatnot. But I'd like to have each of you explain what your due diligence process is and how that stock goes from just a watch list or, with the first meeting, and then you to actually put hard-earned money into it and recommend it to your subscribers. And we can start at the other end. We can start with Nick.
Well, I look at structure. It's the very first thing. So I'll now tell you a story as to why. I came in this business as a young guy, 24, 25 years old, and I didn't know anything. And all of a sudden, I was running a newsletter that had several 100,000 retail subscribers on it. And I guess that means something in the market to junior mining promoters, because you can create liquidity for them, although I didn't know what that meant 10 years ago. And so the structure is very important because you want to make sure that you're not coming into a deal like I did when I was 25 years old, 3 months and 25 days after the last financing.
Oh, perfect.
Right? When I would get a lot of emails like, hey, you should check out this company. And now the first thing I do is look up like when the last financing was. But you need to know who owns the share, at what price. Brent had this up as one of his due diligence criteria on his slides in the presentation he just gave, because it's important, right? If you try to build a company on a house of sand, it's not going to work. And a house of sand is a lot of cheap paper out to people that are in early that aren't going to hold that paper and allow a company to be built.
Okay.
Yeah, I suspect we all use more or less the same criteria. So definitely structure. Since I'm a geologist, I'll focus on geology, and it's really, really key that the team out there exploring has a good sense of what it is they're actually looking for in terms of what it looks like, what drill results need to be, tons and grade, CapEx, operating costs, metallurgy. They need to know all that before they really even get started. And so that's what I look at in terms of an early investment. Do these people know what they're looking for? And will they recognize it if they find it, or more importantly, if they don't?
David?
Yeah, not much to add, really. I guess, people always, and I had a slight different analytical methodology than both these friends of mine. When I started, I saw a long-term secular bull market that would go probably 10 to maybe 17 years in length. And I thought if I could pick the best companies and put them in the top tier, they were buy and hold through all the ups and downs. And I did that with Silver Standard to 65 cents. I went to $40. I stopped out at 20. So 65 cents Canadian to $20 US was a pretty good pick. Pan American was Ross Beatty, hard to miss with Ross. Went from like $1.29. I think it's still, in the 13. I'm not sure, but so these are buy and hold, and that philosophy held fairly well. And I always rated those stocks. So the fund managers that followed me would rotate between these companies like Franco-Nevada, Wheaton Precious Metals, Royal Gold, and so that was for serious investors. Then we dropped down into the mid-tier. That's a little harder because what we wanted was a near producer or producer that had great upside potential, which is my favorite spot to be. Because you've already got a company that's producing. If they're producing profitably, because let's face it, if you're in the gold business, a silver business, a lithium business, a vanadium business, a cobalt business, or whatever, that is a fungible commodity. So you don't really care about the commodity as much as you care about what the margin is on that commodity. And that's the company you want to buy.
Okay.
And that's how I analyze it.
So Brent, we'll start with you in the middle here this time. So what is your top jurisdiction, and what is your number one jurisdiction to avoid in this next cycle?
Top jurisdiction. That's tough. I don't know that I've really got one. I mean, I look at Chile, Peru, parts of West Africa, Nevada, Quebec, of course. Those are probably the top easy jurisdictions where you're pretty assured of your mineral title. And that's what's really key. Again, you look at, is a major mining company operating in that jurisdiction? That gives you a sense that they're there, they'll stay there, and someone else will come in. Places to avoid, that's a real long list. We'll start with Venezuela.
Yeah, sure, that's a good
Move on to Syria, jump down to Angola. There's just too many.
Okay. Nick?
Well, the top jurisdiction is, for me, the U.S., for a lot of reasons, Nevada, Idaho, things like that. I'm looking at Peru as well. I think there's a lot of ground truthing going on there from artisanal miners. There's been some infrastructure builds going on down there that are going to allow the Puno district to open up a bit, I think. I don't like Africa all that much. I know it's huge, and I know there's vast mineral wealth there, but the rules are different, and I don't go there, and I don't want to really play there.
Okay. David? Sure, go ahead,
Can I
Brent.
throw one more thing in? And
Yeah.
It's not just country. It gets down to the very, very local level. You can go to Santa Cruz, Argentina, and it's a great place. You go to the next province north, you're not going to get a mine built. You can build a mine someplace in Colombia, but other areas you wouldn't even go into. So it really comes down to knowing the very specifics of that locality.
That's a good point. David?
Yeah, I'll double down on what Brent just said. And And the Fraser Institute gives you a pretty good idea if you look at it, but that's country, and it doesn't get as specific as Brent just explained, which is extremely important. Once in a while, if you are diversified enough and there's something sweet enough, you might take a long shot, and we have in Bolivia. We believe that we have good intel there, and there's a good possibility in a couple of those situations there that are on the speculative side of the equation that may get a boost just because of, let's say, a more fortunate-looking outlook toward miners in that state. I've totally stayed out of Africa this time, except for 2 trades that I made, because last time the best gold stocks you could own were the South Africans, and you bought a stock for $1,000. 10 years later, it was paying you $1,000 in dividends, let alone going up 20 or 30 fold. So that was the place to be in the last bull market, and I was participating there. Stayed completely away from Africa this time.
Okay. All right, I'll throw a new coming jurisdiction. Brent, have you heard anything about Ethiopia? We've had a few guys start to pitch us there.
I spent some time in Ethiopia. The geology is good.
Yeah.
It's a tough place. I mean, it is tough. It is Africa, and so most countries there are tough. So, to be honest, I guess I don't know enough to make a decent comment.
Fair enough. All right, so let's move on to why we're all here. We'll start. We can start with Nick at the end. Give us your top pick right now, 1 or 2. And maybe one that's on your watch list that you're looking to pick up in the next 6 months.
Just precious metals.
We'll start with precious metals, then we can roll over into stuff.
I'm a broken record on Midas Gold. They got 6 million ounces on the books. There's much more than 6 million ounces there. They're on the road to permitting. I think it's going to be a mine. They had a slight setback in the news with the Nez Perce tribe a couple of weeks ago. I've talked to management. I've talked to some local people. They don't seem to think it's a project killer. They're working with 2 other indigenous groups that are fully supportive, and they think they can bring the Nez Perce on board. And so Midas Gold is my top holding. It's my top pick. I think the project gets permitted. I think it becomes a mine, and I'll go one step further, and I'll say I think it gets bought by Barrick, who came in earlier this year for a 20% little nibble already. You want another one now or no?
We'll go through it again. Brent, go ahead.
How many of you caught my talk earlier? All right, I'll try and repeat this then. I guess what I tried to get across is you need to know what's going to happen going forward to evaluate results. So I'm going to give you a company called GT Gold. The symbol is GTT. They've made what could be a major copper-gold porphyry discovery in BC. The grade so far looks good. The economics, I'm viewing it as a block cave underground, so it's not going to be an open pit. Looks like you can ramp into it if it's there, and it should increase. The grade should increase with depth. They're at the very top of it. So that's the one to watch. And what you want to see in the upcoming drill results is hundreds of meters of 1 to 1.5 to 2% copper equivalent grades. That's what you're watching for. If you see that, this thing's got a big win on it.
Okay. David, your top pick right now.
I got 12.
Okay, get your pens out.
Gold Corp, I think, has the most upside of senior producers. Cisco Royalties is a great royalty company, and I think both Leah Gold and First Majestic are probably the best at this point in time for high-growth mid-tier producers.
Okay. Nick, do you want to cycle through? Do you have a watch list? Do you want to add?
Yeah, I'll talk about one more in Idaho, Revival Gold, real quick. 2 million ounce resource being led by Hugh Agro, who comes from Kinross. They're working on updating their resource, targeting 3 million ounces. It's a former Yamana mine. The infrastructure is built. The mine is built. There's, I think, a couple 100,000 ounces just sitting on the leach pad that could still be leached out. So quite quality project there. Both I mentioned are brownfields, by the way. It's easier to turn something that's already been a mine into a mine in a market like this, as opposed to going out and doing one from scratch. And then a watch list. We talked about Peru. There's a company down there called Palomina being run by a gentleman named Andrew Thompson, who did well by his shareholders to sell a company called Soltoro to Agnico Eagle in the downturn around 2015. He's just put out some trenching samples and early exploration, some 600-gram hits, things like that. It's been ground truth. There's artisanal miners there pulling gold out of the ground now, and I think he's out there sniffing for a deal. So keep an eye on Palomina, PA.
Okay, yeah. we know that one. Brent, do you have one more to add?
I'll go with something Joe and I really don't spend a lot of time with mining companies per se. It's just not what we do. But at the show here, there's Premier Gold, which we do own.
I just met with them.
And I'm impressed. I think this company's done an excellent job of acquiring high-quality assets in Nevada and Mexico. They've got a deal with 40% holding with Barrick at South Arturo. That's the lowest cost mine in the Americas for sure, and maybe the world.
It's about
and
$350 an ounce all in.
Exactly, $350.
I think it's the lowest cost mine in the world.
Yeah. And it's getting better. The mine in Mexico, Mercedes, they're finding a vein adjacent to the old vein that looks like it has some good grade. Cove McCoy, they've got Barrick involved in part of that. The other part, they're drilling out a high-grade resource that may work, and they're active up in Ontario as well. So to me, if an Australian company wants to move into the States, into North America, that's one I'd be looking at.
Now, we have the same thesis that if you haven't looked at a chart of the Australian mid-tiers, they're outperforming everything on the North American sector by about 50% at least, and so
They can't put their money in cannabis there. That's
yeah,
why.
right. So it's all going into gold, and so we all think there's actually going to be a pretty serious trade of these Australians who are going to use their expensive paper to come to North America and buy these cheap assets. We saw that with Pogo, right? Just happened. David, do you have anything on your watch list? What's one to buy in 2019?
Well, self-promotion here. Just go to themorganreport.com/TMR, which is The Morgan Report, so /TMR. And I'll send you a report on the company I just spoke about. That took 20 minutes. As far as here and now, Energy Fuels, it's a great play on uranium and vanadium production. Vanadium's kind of the hot topic on energy metals right now, and they're going to commence probably before the end of the year. Know the management well, and that stock actually about tripled for us this year. So even though we don't hit it right every time, I'd put my record up against anyone in the industry for, profits gained this year in a very, very tough climate.
Okay. So, Brent, this one's a question for you. We talk a lot about who's the next young gun management team, and we can point to a few faces, but who's the next young gun geologist? Who's the guy kicking the rocks that we should be watching and making sure that we're aligning ourselves with, moving forward? Who's the next Brent Cook?
I wouldn't want to wish that on anyone. God, that's a tough question. There's a lot of young people, young geologists out there doing good work, and this is sort of a surprise. So I'm not. I can't come up with any names. I really wish I could. I can't off the top of my head. I can't think of one. But there are some good young people out there doing good work. Actually, David Broughton and his team, doing great work. Flood. Ed Flood's son, what's his name? Casey Flood. Anyway, he's doing fantastic work. Good guy. People like that.
Anybody impressed you on a recent site visit from the geology side, David or Nick? Who do you think's the next young guy to watch?
I mean, what's young in the mining space? Morgan Poliquin, I'm a fan of. I don't know how young he is.
Yeah, fair enough.
I'll just defer to those two things.
Okay. Nick, I'll throw you a little bit of a curveball here because you've got a talk on the energy trade tomorrow. Do you think uranium can really compete with renewables and natural gas moving forward?
Well, I think it has to. I don't think that renewables can compete without some sort of baseload component, and nuclear is that perfect baseload clean component, and so it has to compete. There's nothing to replace it. It's 10 to 20% of global baseload power, and so nobody's slowing down building nuclear reactors. The Middle East is speeding up. China is speeding up, and so clearly it is competing because they're building these reactors now. And I think that, like I say, if renewable is going to compete, then it needs a clean counterpart, and that's why you're seeing these laws that are passed aren't like California. We're in California, where they just passed a landmark. It wasn't a renewable energy bill; it was a carbon-free electricity bill, and everybody champions that as renewables, but really they label it carbon-free because they can't meet the quota without nuclear. Yes.
Okay, fair enough. David, I got a question for you. We talk a lot about, or we see a lot in the news about fantastic gold exploration drill holes, but rarely do silver exploration companies really make big headlines. Is that because the silver juniors are dead, or are we just all asleep at the wheel and it's actually a pretty good trade right now?
Well, I'm not sure I heard the question correctly, so correct me if I am not answering properly. As far as high-grade silver, that's gone. I mean, it's very, very rare to find a high-quality, high-grade silver company. Mag Silver is it. They're about 2 years from production. Their all-in sustaining cost will be $5 the ounce, so if you want a great silver property, do that one. I won't give away my spec that doubled this year and tripled the land position because they don't have long lists. I hate long lists, but you have to diversify in the sector. So there isn't any juice in big drill results in the silver sector, with the exception of maybe one or two. Is that your question?
Yeah, more or less. So then we should be watching it pretty closely then for any exploration junior, then, is what you're saying.
Yeah, I, again, hate long lists, and so anything that gets my attention should get everyone's attention if they want the silver space. But remember, the Morgan Report does, minerals across the board.
Right.
And, questions like you asked on geology or whatever, I'd pick up the phone and I'd call my friend Brent and ask him, or I would call up Dr. McGaugh and ask him. So I'm not afraid to say I don't know, but that would be my answer on that.
Okay. Brent, Australia last year definitely made some headways with Novo and Pacton, and those stocks really took off. They've obviously gotten whacked a bit in the last 6 months or so. What's happening in Australia right now in that jurisdiction? Is that still the real deal, or is that a bit of a fizzle now? Because you went down there, I think.
Yeah, I went and looked at Novo's projects in the Pilbara, which are these nuggets they're finding everywhere. And I got to give Quentin Henning, who's a top geologist, credit for finding what I think is a district with tens, if not hundreds of millions of ounces. That being said, I don't think it's going to be economic to the scale that anyone's going to make big money on it. I think it's small stuff. It's really difficult. It's going to be hard to get a resource. The rock is metamorphosed. It's going to be hard to break out, get the alluvial gold out of it. So, we made good money on Novo.
Yeah.
But I'm afraid, and I hope I'm wrong, but I'm afraid it's not going to be an economic district on the scale that people are thinking.
Okay. Looks like I'm being told to wrap it up. So thanks, guys, for being up here today. Thanks for sticking around, and enjoy the rest of the show.